We talked about what Gary did. Here's what Gary should have done to put him in the absolute best position to get the highest price, the best terms, as well as the best post-deal outcome. Now, the first thing he needed to do was shift his mindset. I mean, Gary, like many people, get these emails and calls and they believe, okay, this is the acquisition universe. That's not the case. Gary has to realize that he is the prize and his business is a very scarce asset. And there's going to be a lot of potential buyers vying for this. So he needs to think from an abundance perspective, and he needs to go out and be the hunter rather than the fisher. And I've talked about this on the Sell-Side M&A Masterclass. When you're selling a business, you don't wait for buyers to come to you. You go out and locate those buyers and you run a competitive process. By introducing competition, the Cedar Fork guys would not have been able to squeeze him on terms and price, because the more optionality Gary has, the stronger his resolve is in negotiating. So, number one, mindset shift. Number two, run that broad process. Number three, he is in a position to choose. He does not need to be chosen. He is interviewing the private equity firms, not the other way around. So he needs to take control of that process. And so Gary decided, hey, I've got a wonderful investment opportunity. I've got a 5+ year horizon. I'm going to take some chips off the table. I'm going to build this thing and I want to exit it for a massive payday 5 years from now. Now I've got to find the right partner. And so instead of finding himself in the position where he's talking to Cedar Fork and maybe one or two other players, now he's got 50 or 60 private equity firms. He's gone out and researched which private equity firms have made investments in my industry, both past and present. They certainly get contacted. Which other private equity firms are generalists and would likely take a look at my industry and my business? They get contacted. You go broad. It might be 40, it might be 50, it might be 200 private equity firms. You might sprinkle in 5 or 6 strategic acquirers just to push upward pressure on price. But you run that full process. And then once you whittle it down, you get it down to the last maybe 2, 3, 4 players. You've pushed up the price. Gary was originally focused on the headline price, but as I said earlier on in our discussion, it's the pros that are really focused on the partner. Once you get that price up to where it should be, now you focus on the partner. So once you've got those 2, 3, 4, 5 private equity players, now you're able to go sit down with them and you start asking them questions. They begin with, who are you, right? So what fund are you in? Are you in fund 1, fund 2, fund 3, fund 4? Sometimes when they're in the first fund, that means that the private equity group is new, right? They've just raised one fund. And that might be risky, right? They don't have a track record. You got somebody that's in fund 5 or 6, especially 5 or 6, and you've got the same limited partners or LPs investing in each of these funds. They've got a track record, right? These LPs are coming back. They're getting a return. So they want to invest in the next fund. And, oh, we did a great job. Next fund. I'm not saying that you shouldn't partner with somebody in fund 1. I am an LP in a brand new fund. I'm in a fund 1 right now. But the reason why I'm in the fund 1 is because the guys who put this firm together came from other firms that I respect. They have a track record, and I think they're going to kill it on this. So for me, investing in fund 1 was exciting. Again, I don't think you should exclude a private equity firm just because they're fund 1. It just means you have to do a little bit more diligence. You might want to talk to their LPs. Now, you sit down and you ask the private equity firms that. Hey, one says, I'm in fund 2. Okay, well, where are you in fund 2? How much capital have you already blown through in fund 2? Well, fund 2 is $1 billion fund and we've spent $500 million already. Well, 50% of the fund is now extinguished. So how much runway will there be for you? And so you can take that when you sit down with the private equity fund, and now you're writing down your questions and you're going to cross-reference everything with the past portfolio companies, right? So, Paul, we're in fund 5 and, we're about 1/3 of the way through. Okay, that might be acceptable. When I check the references, or rather when Gary checks the references, now he's going to be able to talk to the other CEOs and say, hey, where were you when you partnered? Where were they in the fund? Were they at the beginning of the fund, the middle of the fund, the end of the fund? And how did that impact you? You'll be able to ask them, how many platform companies will you acquire in this fund? I mean, it's like, hey, you've got $1 billion fund and they're committing $150 million in equity per platform company, how much is left over for acquisitions? So understanding how many platforms will fit in each fund, of course, is important. And then getting the private equity firm to commit to you up front. It's like, hey, I've got this great business in Tulsa. You're spending $100 million on it. And there's a lot of potential acquisition opportunity out there for us. I, as Gary, want to grow the heck out of this thing, and I want to do a lot of different deals. I don't want to be reckless, but I think I know a lot of competitors we can go out and buy. How much capital are you setting aside for me to do M&A? Then, with that answer, now you're able to go back to the past founders and CEOs and say, well, how much did they tell you they were going to be able to invest in acquisitions? Did they? How were they when they invested in acquisitions? Were they reckless, paying any sort of number? Were they far too disciplined and running scared, right? So you never got any deals done. So how much money did they promise you that they'd be able to invest in acquisitions? How much did they actually deploy? Who made those decisions? So private equity firm. We've got an acquisition target. I bring somebody to the table. I think it'd be great for this business. Who do I need to talk to? Is it the partners I work with? Does the investment committee, whom I don't even really know the investment committee, and they don't really know my industry, they're just finance nerds, are they the ones making the decision as to whether or not I can go out and make this acquisition that I think is going to grow the shit out of my business? I don't know. So I need to know that. What do the LPs have to say? I mean, do we have to go to LPs and ask their permission for us to do an add-on acquisition? Like, how far on does this actually go? Like, what does the decision tree look like? And then again, cross-reference that with the past portfolio CEOs. What did they go through? What was it like to actually do a deal? How did they have to support that? Was the fund reckless? Was it too disciplined? Where was it? So I think these are all important questions because, again, if I'm Gary and I think to myself, my deal is $100 million. I'm rolling $30 million into this, so I'm going to own 30% of this. Then I want to go out and do deals. How much is available for me to acquire? Like, I know that I can go out and spend $300 million and I can grow this business. Does that capital exist? How do we fund this? Gary would also be wise to ask each private equity fund what their required rate or targeted rates of return, their IRR or multiple on the fund is. So some private equity firms will say we need to earn 3x our money, or we've got an IRR target of 25%. That's all well and good. Those are the targets. Now, go back to the CEOs. Hey guys, what did they tell you the targets were? What did you actually get out of this? John, you sold your business to XYZ Capital for $100 million and you exited. How much did you exit for? What was your internal rate of return on your investment? Past practice, of course, doesn't guarantee future performance, but it certainly illuminates how these guys operate and how disciplined they are in deploying capital. So asking the questions first to the private equity firm, make your list, get them all figured out, and then cross-reference it to determine if what these guys are saying is actually true. I mean, what you might hear is, hey, we're really hands-off. We let the founders make all the big decisions, and then you talk to the former founders and they're like, hey, they didn't let us do jack shit. Like, I'd ask for permission to take a dump. Here at Potomac, we love to kill it for our clients. And I think that education is the cornerstone which allows our clients to make the best decisions for themselves. The more you can understand about the nuances of how strategic acquirers work, how the operations of private equity firms work, and the psychology and the tactics of an M&A transaction, the better you're going to be when it comes time to pull the trigger. If you own a business and you're being contacted by strategic acquirers, search funds, private equity firms, and you're trying to size up what you might do, take a step back and give us a call. We'll help you forge a plan, whether that exit is a year from now, 5 years from now, or 10 years from now. We'll help you think through a plan that is specifically tailored to your financial goals and objectives. So please contact us directly. I've put a link to the contact form in the description of this video, and you can also contact me directly on LinkedIn. Again, you can click on the link below to download the questions you should ask private equity. This is a culmination of 20 plus years and billions of dollars in transaction with private equity, and these are the questions that I recommend clients ask private equity firms before they do a transaction. It's probably something you're not going to want to miss. Further, if you got value from this video, you're not going to want to miss what we have coming up here in the coming weeks. We'll be doing the valuation masterclass. We'll be kicking off the buy-side M&A masterclass, and we've got a lot more to say on private equity. And feel free to share this masterclass series with somebody who you think might benefit from it. Again, I'm Paul Giannamore. Thank you for joining me today, and I'll see you on the next one.